What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Kress, head of Geopolitical Research and Strategy at BlackRock. Given recent events in Asia and the Middle East, it's no surprise that markets are paying more attention to geopolitics. This week, I'll provide an update on our latest geopolitical views for 2024. Geopolitical fragmentation, one of the 5 megaforces we're tracking, is playing out. Attacks by Houthi militants on Red Sea shipping highlight how hotspots can impact supply chains. Geopolitics has become a persistent and structural market risk in our view. We see globalization rewiring as countries and companies favor national security and resilience over efficiency. The world has faced cascading crises, from the U.S. trade wars to the COVID-19 pandemic, Russia's invasion of Ukraine, and now war in the Middle East. These developments have accelerated global fragmentation and the emergence of competing geopolitical and economic blocs. And the openness of countries to trade with each other has stalled, based on world trade as a share of global GDP. This is a marked departure from the globalization and geopolitical moderation of the post-Cold War period. Geopolitical fragmentation is one reason we see persistent inflation pressures and policy rates staying above pre-COVID levels. Supply chains are becoming more complex as countries like Mexico and Vietnam act as intermediaries between geopolitical blocs. Such countries may stand to benefit from competition between blocs, yet significant investment will be needed in areas like critical infrastructure for benefits to fully materialize. Companies that prove resilient to shifting supply chains may have a competitive edge, and some will also benefit from robust industrial policies like the U.S. Inflation Reduction Act and the CHIPS and Science Act. Fragmentation's economic and market impact will depend, in part, on if changes to the global order are managed or disorderly. Greater geopolitical volatility and the rising number of violent conflicts worldwide increase the risk of a more disorderly and less predictable path. Yet as broad equities and other assets quickly move on from geopolitical events and risks, we think they may not be appreciating that we have entered into a new geopolitical regime. The old playbook no longer applies in our view. We reaffirm our high Gulf tensions risk rating given the ongoing war between Israel and Hamas and the risk of escalation. We also keep our U.S.-China strategic competition rating at a high level. We think intense structural competition is the new normal, especially in technology and defense. The November meeting between the U.S. and Chinese presidents has helped set a more positive tone for relations and expanded communications in the near term. But Taiwan remains a significant flashpoint as the recent election shows. And coming back to Gulf tensions, we believe the risk of escalation is high, with attacks by Iranian-backed groups on the rise. The disruption of Red Sea shipping aiming to pass through the Suez Canal shows how the conflict can expand to hamper supply chains and drive up production costs, in this case via rising shipping costs. Here's our market take as we enter 2024. We expect deeper fragmentation, heightened competition, and less cooperation between major nations. We see the rewiring of globalization benefiting countries like Mexico and Vietnam. The New World Order is also spurring a surge of investment in areas like technology, clean energy, defense, and other sectors seen as critical to countries' economic and geopolitical goals. For details, read our weekly market commentary. Go to blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com.